Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on the 2nd of October 2018. I'm Darren Sinden and you can follow me on Twitter throughout the day by using @ds_Pepperstone. Right, let's kick off as always with a look at the overnight changes and price moves we need to be aware of. Really, for the most part, continuation of the moves that we saw towards the end of last week. And what I mean by that is dollar gains. You'll see that both euro and sterling fell against the US dollar over the last 24 hours. One small surprise perhaps was that we didn't see a bigger pushback from the Canadian dollar against its US rival on the news of a fresh round of trade deals between Canada, Mexico and the USA. I guess if we look at the weekly move, we get a better perspective of what the Canadian dollar has done recently. Nonetheless, we might have expected a bigger headline figure there. Dollar index for its part continuing to improve, 95.41 trading shortly before we recorded the video, up by around 0.12% and looking quite firm again. Will that continue? That remains to be seen. Okay, what's on the calendar today then? Events that may move the markets. A fairly busy calendar, though relatively light on high impact data. We've already had the decision of the Reserve Bank of Australia on interest rates, and we'll look at that in a bit more detail momentarily. And just to remind you, it's a national holiday in China, and there is an ongoing meeting of European ministers taking place in Europe. We've had at 6 o'clock this morning, London time, 5 a.m. GMT, consumer confidence data out of Japan for September. The figure slightly better than expectations and ahead of the prior read. To come then at 6 o'clock GMT, 7 a.m. London time, we will have nationwide house price index data for September out of the UK. And then at 7 a.m. GMT, we shall have the unemployment change data for September out of Spain, and that's followed by the PMI construction data for September for the UK, and that data released at 8:30 GMT this morning. At 9 a.m. we'll have producer price data for August out of the Eurozone, and then we take a break until 12:55 when we hop over the Atlantic for the Red Book Index data out of the US for the week of September 28th. At 13:45 we'll have the influential ISM New York Index Business Conditions data, and that'll be for the month of September. And then at 1400, the first of today's central bank speeches, and it's the Fed's Quarles that is stepping up to the podium at 1400. At 15:30, there's a 4-week bill auction in the USA, but that's followed at 16:45 by perhaps the highlight of the day, a speech by the Fed Chair Jerome Powell. 19:30 sees the release of total vehicle sales for September from the USA, and if you're still in the market at 23:01 tonight, you can see British Retail Consortium shop price index data for the month of September. Okay, breaking news and comment then that's caught my eye overnight. First of all, the Reserve Bank of Australia has held interest rates in the country at 1.5%, and the bank offered few signs that it is in any hurry to take rates higher amid concerns about household debt and weak wage growth in Australia. Staying in Asia Pacific, the Indonesian rupee fell to 20-year lows versus the US dollar overnight as weaker inflation data unsettled investors. Emerging market problems may have been swept under the carpet for the moment, but they have not gone away. And the EU will vote on emissions targets today and consider proposals to cut CO2 emissions by 45% by 2030, with obvious ramifications for power generation and the automotive industries. Okay, food for thought then, something to take away with you into the trading day and beyond, and why not think about this? The US now appears to have mended trade fences with Mexico and Canada. However, its trade relations with China are still pretty frosty. Goldman Sachs has looked at the global trade connections in the context of a potential Chinese slowdown if trade conditions don't improve with the US. And they find that it is emerging markets rather than developed markets that will be most affected under this scenario. And the chart here shows the connections of destinations and export origins, and snapshot of Goldman's comments at the top there. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and please do take a moment to read this risk warning thoroughly. Thank you for your time.